Chapter 1, Exercise 3.
Good morning, Miss Nora. It's a pleasure to meet you today. I'm Robin James, the tax consultant who will be dedicated to assisting you.
Hi, Mr. Jones. Pleasure to meet you too. I appreciate your help.
Follow me this way, please. What do you think of the weather today, Miss Nora?
Today is fine. The sky may look gloomy, but I don't think it will rain soon. Yet, I'm always prepared with an umbrella inside my bag.
I think so too. Hopefully, it will rain just in the night so it's easier for everyone to finish the work during the day. Would you like to have a cup of tea?
Sure, thank you.
It's my pleasure. We are more than glad having you visiting us at our firm. Well, I have learned your business reports in the past 3 months, and they are so impressive. Now I wonder how I can assist you.
As I informed you earlier, I'm the one recording the business turnover. Now, I'm planning to escalate the revenue and focus on the business growth. Therefore, I will hire an accountant to help me with the bookkeeping and tax matters.
That's totally inspiring. Do you have any concern about this?
Yes, basically, I would like you to guide me in the tax planning for my newly established company. It will be great if I'm fully aware of how my company will do the tax management so I can manage the expectation with the accountant I'll hire.
Well, your concern is valid. But before we go to the tax planning, why don't we start with the four tax obligations that all taxpayers should fulfill, including companies?
I'd love to listen to them.
They are to register as a taxpayer, to calculate tax payable, to pay the tax, and to file the tax return. These four are the basics in fulfilling the tax obligations.
Chapter 1, Exercise 10 and 12.
Welcome on board, Miss Gilmore. We are glad to have you in our company. As you may be aware of, we have detailed the total amount of salary that you will receive every month in the offering letter.
Yes, it is clear.
Perfect. I also would like to emphasize that the amount of tax imposed on your income will be borne by the company. We will ensure that you have no issue with the tax you will be subject to as an employee and the tax obligation you must comply with. After this, we will assist you in registering yourself to obtain a tax identification number, and you will be a resident taxpayer in this country.
I'm grateful for that.
Basically, what we will do is to withhold your income tax by applying the progressive tax rates for the resident taxpayers. You are entitled for several deductions on your income, which will greatly impact on the tax calculation. Your taxable income is derived from the income after deductible expenses. With that being said, we are fully taking care of your tax calculation and remittance. You don't have to worry at all.
Chapter 1, Exercise 14.
Hi, I'm Andrew. I'm a senior specialist of Tax Compliance and Litigation Division under Mrs. White's supervision.
Hi, I'm Claire, a new specialist in the division. I think we have the same manager. Mrs. White's interviewed me during the recruitment process.
Oh, great! Nice to meet you, Claire.
Nice to meet you too. I'm supposed to meet Mrs. White's at 9 a.m., but I think I've arrived too early. Now it's just 8:30.
First day is always an important day, isn't it? Why don't we have a cup of coffee? I'll show you the cafeteria.
Sure, thanks.
What was your last educational experience, Claire?
I attended the Certified Public Accountants exam administered by the Indonesian Institute of Certified Public Accountants, and prior to joining this company, I worked in a public accounting firm.
Wonderful. We've got a CPA in our team now. What are the professional requirements to be a CPA?
To fulfill the requirements of a CPA, I need to have 5 years experience in a public accounting firm, at least 2 years as a professional auditor, and render audit services in at least 20 projects in two different industrial fields. Moreover, I have to perform as a team leader 10 times in every assignment I'm in charge of.
Wow, you're experienced.
Chapter 1, Exercise 16.
One of the challenges many tax consultants face when rendering services is that they need more expertise in analyzing clients' financial statements. With your background, I believe that you can support the team with your expertise in accounting.
Thank you, Mrs. White. I'll do my best.
My most pleasure. I'm glad that you have been in this stage as you are a CPA. For your expertise development, I encourage you to obtain a certification of tax consultant.
I'd love to.
You don't need to worry because our company is really supportive. We arrange some classes for the exam preparation. What's on your thought?
I think I can prepare myself as soon as possible.
Great! Let me talk to the HR team and they will guide you with the preparation program. They will share the schedule. Just to give you a brief overview, there are 3 levels of certification to become a licensed tax consultant, which differ from the scope of services. Certification A is to become a tax consultant for individual taxpayers. Certification B is to become a tax consultant for individual to corporate taxpayers. And only holders of Certification C may serve as tax consultant for taxpayers in relation to the multinational companies and international taxation. You can take the exam sequentially. You will also have to submit some required documents, including the bachelor's degree certificate.
It's noted.
If you wish to do initial research, you can go to the official website of the Tax Consultant Certification Organizing Committee. It's kp3skp.or.id. They will hold the exam certification of tax consultants twice a year.
Chapter 1, Exercise 18.
As we are aware of the dynamics on Indonesian tax regulations, the government of Indonesia has released and implemented Law Number 7 of 2021. So what are the key changes that will impact on our business activities?
Several changes lie on the rising tax rate of value-added tax, which will impact on our production expense. Nonetheless, the fringe benefit that we provide for employees has become deductible expense. This can reduce the significant tax payable we have.
Great. Please help to prepare the tax planning, identify the tax risk and how we can mitigate it. We have to highlight the changes and offer some suggestions to the management team when making strategies.
It's noted. Mr. Joe, regarding the tax auditing this month, we have already sent all the required tax-related documents. Now the team is working on that.
Thanks for updating me. Good job. Alright, we can finish our meeting. For the tax planning, please update me with the progress this Wednesday. If you think we need some expert advices from tax consultants, let me know.
Chapter 2, Exercise 3. This week, we have 3 new clients who are individual taxpayers. The first one is Laura Chiang. She is an expatriate employee for a manufacturing company in Indonesia as the general manager. She earns 150 million rupiah per month and receives several fringe benefits from the company. Besides, she has other wealth and wonders of how to file the tax return. The second one is Ibu Diana. She is a general practitioner for a public hospital in Jakarta. She has 2 other jobs that are running her own clinic at her house and a boutique with her partner. She needs us to guide and assist her in filing her tax return. The third one is Ibu Mila. She's a content creator who mainly endorses and promotes her clients' products on social media. In addition, she has a beauty clinic and a restaurant in South Jakarta. Chapter 2, Exercise 6.
Good morning, Miss Chiang. We would like to arrange a meeting to connect you with our consultant who will assist you with your needs. Her name is Ibu Lydia. She has experience in handling expatriates' tax returns. So, when will be a good time for you?
Well, I'm glad to know that. Tomorrow at 9 a.m. should be fine.
Would you prefer the meeting to be online via virtual meeting platform or on-site at our office?
Can we make it on site, please? I'd love to talk in person.
Sure. I would like to confirm that the meeting will be held tomorrow at 9 a.m. at our office. The objective of the meeting is that you can share all the information on the sources of your income and any fringe benefits that you receive from the company you are working at. If you can bring us some supporting documents to show, that will enrich our discussion as well.
Well noted. I'll bring some as I could.
That's perfect. Thank you so much, Ms. Chiang. Have a nice day and see you tomorrow.
Chapter 3 Exercise 1. When you are going to run a business in Indonesia, you have an obligation to pay corporate income tax according to the income tax law. It says that corporate income tax will be calculated from the net income you earn from the business as the tax base. Therefore, you are highly recommended to bookkeep all the transactions within your business operations to prove that your tax calculation is accurate.
That's great advice. But what if I have a lack of manpower and decide not to manage the bookkeeping until a certain period? Will it be a significant issue?
It will. All corporate taxpayers are obliged to maintain bookkeeping unless your turnover does not exceed 4.8 billion during a tax year. Even so, you still need to retain records as the required documents for calculating your tax payable. In addition, there's a tax incentive specifically for those just starting a new business. If your company earns a turnover of under 4.8 billion during a tax year, you are allowed to implement Government Regulation Number 55 of 2022. It stipulates that your tax payable is 0.5% of your turnover. Nonetheless, this regulation has a limitation. You can only implement it to your business in the first 3 to 4 years.
So, what will happen when the turnover rises to more than that amount?
If your turnover rises to more than 4.8 billion and slash or it is already more than 3 years, you must refer back to the applicable statutory tax provisions that is stipulated in the Article 17 of Income Tax Law, which regulates the tax rates. In that case, you are only allowed to maintain bookkeeping according to your turnover.
I would like to know about the tax rates and calculations. But before that, are there any other taxes that I will be liable to when running a business?
Exactly. While the taxes may vary according to what type of business you will be running and the scope of transactions you will be conducting, I can tell you that corporations usually owe four common taxes such as corporate income tax, withholding tax, final tax, and value added tax. Especially for the VAT, when you become a taxable person for VAT purposes, you're obliged to collect these taxes and remit them to the government. Chapter 3 Exercise 11. The income tax law in Indonesia has always been changing rapidly. In the last 2 years, 2022 to 2023, the rate has remained the same, which is 22%. Public listed companies with total paid shares trade on the stock exchange in Indonesia of a minimum of 40% that fulfill certain requirements are eligible for a 3% lower rate. Those with a gross turnover under 4.8 billion rupiah may enjoy facilities that may reduce the income tax payable, which is 50% times 22% multiplied by taxable income. Between 4.8 to 50 billion rupiah, there are two main processes in the calculations. First, taxable income that is entitled to facilities will be imposed 50% times 22% rate. The remainder is taxable income that is not entitled to facilities will be imposed 22%. Above 50 billion rupiah, 22% times the taxable income. Chapter 3, Exercise 14.
So, what about expenses this month?
We have collected all the payment receipts from all departments. We incurred some additional expenses in April. For example, the Human Resources Department incurred three additional expenses, such as traveling expenses, promotional expenses, and cost of training.
Great. So, they are deductible. What about the non-deductible expenses?
They remain the same as the previous months. There are premiums for health and accident insurance. As stipulated in Article 9 of Income Tax Law, premium insurance that is not paid by employer, the cost therefore becomes non-deductible expense to the company.
Can I see the number after the expenses are deducted?
Here you go. Our final taxable income results 4 billion rupiah. Chapter 3, Exercise 17. As requested, I have prepared a list of different types of depreciation methods that are applicable in accounting and taxation.
Great.
We understand that depreciation and amortization explain how a company's assets lose value over time and enable a company to deduct an asset's cost gradually till the useful life is at the end of its life. The assets include tangible and intangible property or costs. Basically, we look at the cost of the item and take away its estimated residual value. Then, we use a depreciation method to write it off, and finally to determine the deductible expense for calculating tax payable.
Very clear.
In accounting, there are 5 ways of doing this. There are straight line, double declining balance, sum of the year's digits, unit of productions, and hours of use method. However, according to the income tax law of the Republic of Indonesia, there are two applicable depreciation methods that are the straight line method and the double declining balanced method. The straight line method reports an equal depreciation expense throughout the entire useful life of asset until the entire asset is depreciated to its salvage value. The salvage value of assets has been stipulated in Indonesia tax law. Meanwhile, the double declining balance method shifts larger depreciation expenses toward the beginning of the asset's useful life so that expenses decrease as the assets near its salvage value. As a result, the double declining balance method depreciates assets more quickly than straight line does. Chapter 4, Exercise 3.
As the new tax law has been released, what implies to us is that the materials in our production are now taxable. Nonetheless, they are all granted VAT incentives, which allow us not to collect and pay the tax.
Okay, that's good news. Is there anything we should worry about?
Yes, there is. Since some materials are now taxable, we are obliged to register the company as a taxable person for VAT purposes. It means that we have a new responsibility regarding the tax invoices whenever we receive any supplies and vice versa. Though the materials are not subject to VAT, we will receive tax invoices with a note of non-collected VAT and must submit all the tax invoices to the online official platform called eFaktur. Furthermore, all this should be filed every month and at the end of year.
That is reasonable.
With this, I would like to propose hiring a new staff to support my team in this matter. Our team is already fully occupied with the regular tasks as our materials are all sourced from different vendors and delivered in daily basis. We need a dedicated person to handle this. What do you say?
Not a problem. Please coordinate with the HR team regarding the qualifications and to announce the job vacancy. Thank you for the update, Mr. Eric. Really appreciate it. While we are waiting for the new hire, please mind the deadline to implement the new regulations.
Sure, I will. Thank you, sir.
Chapter 4, Exercise 7. How can I help you, sir?
I have received some orders from the local government agencies here for a few times, but I cannot proceed the order since I am identified as a non-taxable person for VAT purposes. What should I do with that?
It's true. A non-taxable person for VAT purposes is not entitled to supply taxable goods or taxable services to the government agencies. You have to register yourself as a taxable person for VAT purposes. Only then you can sell your products to them. Now let's check if you're eligible. After receiving the required documents regarding your company's profile and financial statements, your company is eligible to register, sir. We have started to identify the products that you sell up to the financial positions you are at now.
Glad to know that. Then, what happens if I become taxable person for VAT purposes?
Good question. The first is absolutely the solution to your problem. You can sell your products to government agencies. Second, you are entitled to credit input VAT, which these two will benefit you.
Okay, so how does tax credit work?
Before I share with you the idea of a tax credit, let me explain four obligations as a taxable person for VAT purposes. First, preparing and issuing tax invoices. Second, collecting VAT when supplying goods or services. Third, remitting VAT. And fourth, filing periodic VAT return. This may be seen as a burden to your company, yet an acknowledgement that you are VAT registered.
Do you think my company is capable of doing that?
To answer that, you could plan more budget for hiring capable manpower in the tax department in your company, which leads me to the idea of considering the cost and the potential return from the market. Since you would like to sell your products to government agencies, that may add more revenues to your company. Chapter 5, Exercise 3.
Hi, my name is John. I am from Double J Construction based in Los Angeles. My company has recently received an inquiry from Indonesia to build a residence in Bali.
That's great news.
It is. Yet, I would like to know about the Indonesia tax obligation that I shall consider regarding this project. I am now gathering the data so our company can manage the budgeting, including the taxes. We would like to know the overview of the tax provisions in Indonesia, specifically whatever is subject to tax in relation to construction, so we can conduct a good negotiation with our client afterwards.
Perfect. Well, I bet you know that Indonesia and United States have entered into a tax treaty that will prevent double taxation. You can find that construction is stipulated in the treaty and your construction will be a permanent establishment when it exists in the country and continues for more than 120 days.
Noted.
Great. When you have been finally established as a permanent establishment in Indonesia, you can fulfill your tax obligation according to the Indonesian tax law. You have to pay your tax to the source country, which is Indonesia. Now I'm going to show you the Indonesian tax provisions regarding income tax on permanent establishment. Chapter 5, Exercise 7. There are numerous ways to connect two or more affiliated entities. One company can belong to another company, yet two companies may belong to the same third company. Another instance is the same person serving the same job position for two different companies. All of these companies are under the same company group that is called multinational enterprise. Having such ties, the entities often conduct transactions between themselves. One subsidiary company may sell goods or render services to its parent company or sister company with a special price charged. This price setting between related parties is generally called transfer pricing. As stipulated in the Minister of Finance of the Republic of Indonesia number 213, transfer pricing is the pricing in a controlled transaction. Controlled transaction is referred to the transaction conducted between parties under common ownership or that have special relationship. Most common related parties are supplying products or rendering services to each other. Related parties may also engage in less visible transactions such as intellectual property transactions and financing or lending between controlled entities. Transfer pricing becomes an instrument in managing the internal market efficiently, maximizing profit after tax globally, and minimizing business risk. The existence of group synergy allows the companies that are members of the company group to obtain benefits that generally cannot be enjoyed by independent companies in similar situations. The examples include combined purchasing power, economies of scale, unified management, or increased lending capacity. However, multinational enterprises may use transfer pricing as a tax avoidance tool. For example, a company may raise expenses where taxes are high and exaggerate revenues where taxes are low. This behavior is known as transfer pricing manipulation that bring harms to countries. Countries may lose its potential tax revenue since the value of taxable income does not match the actual conditions. To anticipate the harm that transfer pricing manipulation causes, many countries reacted to interfere the practice. United by the global organizations such as Organization for Economic Cooperation and Development or OECD and United Nations or UN. These organizations create transfer pricing guidelines for multinational enterprises and tax administrations and United Nations Practical Manual on Transfer Pricing for Developing Countries. Both Transfer Pricing Guidelines and UN Transfer Pricing Manual have become a set of recommendations where countries can then create their own domestic regulations regarding transfer pricing. Including Indonesia, the country has been able to enforce the law on the domestic transfer pricing since 2010 and been continuously updating the regulations. Essentially, the regulation requires company to comply with the arm's length principle. The arm's length principle is regulated in Article 18, Paragraph 3 of Indonesian Income Tax Law. According to the principle, in the event that the conditions of the transaction between related parties and transaction between uncontrolled entities are the same or comparable, the price or profit of both transactions must be equal. To be clear, the price or profit in the transactions conducted between related parties must be within the price range or profit range in the transaction between parties without a special relationship used as the comparable. To respond to the enforcing law on domestic transfer pricing, multinational companies have put more attention on reviewing the company's pricing policy along with the tax risk management and prepared necessary transfer pricing documentation. The transfer pricing documentation will provide economic analysis that support the price setting whenever challenged by tax authorities. Referring to Article 2, Paragraph 3 of the Minister of Finance of the Republic of Indonesia number 213, it is mentioned that transfer pricing documentation consists of master file, local file, and/or country-by-country report.